The Dow rallied for the ninth straight day today, the longest streak since 2017. Yet the tech-heavy NASDAQ tumbled 2% one day after the key earnings reports out of Netflix and Tesla disappointed investors. Yet our featured guest today is very bullish on Tesla. He's also bullish on AI. Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and scorching hot Scottsdale, Arizona. Toby,
no,
I don't know how
it's
you're
hotter than
handling it.
hot. It's hell right here. I'm actually
It's
in
hell.
hell.
I'm surprised you're not doing the show from the pool today, but that's maybe next time. We'll all get lucky for that. So, and our guest today is the Managing Director of Equity Research from Wedbush Securities in New York City. Dan Ives joins the show. Dan, welcome to the program.
Great to be here. Thanks for having me.
Well, it's great having you. And I have to say, you have been on the news all day today talking about Tesla, their earnings. You even lifted the price target despite the 5% drop after the earnings release yesterday. What do you know that the rest of the street doesn't?
Look, I think, and I've seen this for decades covering tech stocks. I think a lot of times the reactions after quarters, there's an emotional reaction. Sometimes stocks like this, like they run up, you have the sell-off after. I think investors, what they're not understanding here is this is just small steps in a much broader strategy that's now happening at Tesla. I think, margins, are all the price cut done? Musk is not going to say that. There could still be some small ones. I think 95% of them are done. Margin story stabilizing, units look strong. And I think the sum of the parts sort of thesis between supercharger batteries and AI/FSD starting to come together. And I view it as kind of an Apple 2008, 2009 feel.
Hey, Dan, how much, a big part of your thesis, as I've heard from you over the years, has been that self-driving really, was not as far away as most people thought. Yep. And how much of self-driving is your thesis? Because I tell you right now, when I don't have to call Uber and I can get my Tesla to drive me to the airport and drive me back.
No, but look, to your point, I mean, FSD, it's not a pipe dream. In other words, FSD AI, like that, and think about it, you got Waymo, Google,
I take Waymo here in Phoenix. When I go, I take the train down, and then I take the Waymo to go to a sporting event, like a hockey game. Waymo brings me back. I've been on that list for 2 years.
Yeah,
it is the greatest thing since sliced bread. It absolutely works. It hasn't got close to anybody on the street or a bike or so on and so forth. So I'm a believer, but you were a believer a long time before I was. Why were you such a believer so early?
I think it's a believer. Look, I love transformational themes and picking names and just sticking with them. And look, some will criticize perma bullish. I get it, but that's why when it comes to like Tesla and Apple and Microsoft and Amazon and just some of these, I mean, my view has really been going back, call it 15 years, that this is really an industrial revolution. So just a modern day one. I think there's second, third, fifth, and now we're going into the fourth industrial revolution.
Yeah, my research company is named Transformative Research. My original one was ChangeWave Research. So I'm with you on the transformational side. But it's secular transformation you're talking about. In other words, once somebody gets a lead, it's hard to displace them, right?
Well, also, I think like with valuations, right? Like, let's go back to Apple 2009. Okay, the Bears, at the time, it's another BlackBerry. It's a hardware company. Right. It should trade at 12 times to 15 times PE, depending on the cycle. My view on Apple has always been, no, it's that golden install base Cupertino, the services business, the valuation at one point was $50 billion. That eventually was going to be $1.5 trillion. And that was a big part of the re-rating that we've seen. Now, others be like, well, I'm sitting there in my spreadsheet and my valuation, I'm not seeing it. Yeah. But that, it speaks to like, that's what makes a market, right? Between bulls and bears. I see it every day. I mean, I believe right now we're in the start of a new tech bull market.
Well, I've always I've followed you for so long. And one thing that I've always admired is that in essence, what you're saying, what I say about to many quote unquote tech analysts is is they lack imagination. In other words, it's black and white. And technology revolutions, every 15 years we have a tech stack, redo. It requires imagination. You can't just get it off a spreadsheet.
Well, but also 3 million miles flown, lifetime. I mean, the point is you don't see it in your office building on Park Avenue.
Absolutely.
I know, I'm saying that's my other view. It's easy to sit there on an upper floor and just be not seeing in my spreadsheet. But when you're traveling to Asia, you're traveling to Europe, you're traveling around the world, you go into the factories, go into the plants, talking to customers, it's a different view. And that's always been our thesis. I'm not one that sits there for transformational growth names and tries to put a little PE box around Netflix. That's just because
it's failed logic, Dan. It's by definition, if you've reinvented something and you've reinvented a whole or started a new category, why didn't somebody say that Ford Model T was only worth 2 times cash
exactly
flow, right? I mean, you couldn't imagine that there was going to be 24 plants in Detroit that were pumping out 150,000 Model Ts, and Ford went from essentially $1 to $250 in valuation.
Yep.
And so I'm just with you. I just want to give you the kudos on that, because the other thing.
No, I appreciate it. Thank you.
Because nobody brings that up, how much you travel. I missed you in Beijing by about 3 minutes, I think, flying into the airport a number of years ago.
I saw you. I saw you as I was.
Yeah, because we were all this much taller than everybody. That's why.
Through the smog, I saw you.
Smog, right. Well, it was summertime, so you actually couldn't see more than 5 feet, ahead of you. But this was when they opened the Apple store in Beijing, and in Beijing and Shanghai, and I've never seen anything like that. And I think that you had shared, early on that was coming, and I was fortunate enough to be there on June 9th, or excuse me, January 9th, when Steve came out and did all this, and I got to ask a question because I was in the queue, so that's pretty much the top of my life right there. But he pointed at the apps, and I didn't know what those apps were. I thought it was just like a facade, like they needed color on the screen, so it didn't look blank. And when I asked him what was what's the thing that gets you the most excited about this, is number one is my mom can use this phone, and number two is you see these things here. Do you want to someday you're going to be able to order food on it. Someday you're going to be able to send a text message, and do it a voice. I mean, that was a visionary. That was, the whole enchilada. And I'm with you on AI. Generative AI is like a tiny step into the space. But who do you like right now in AI beyond the most obvious? Is there anybody in the second tier you like?
But to your point, that's also why Nadella, Musk, Cook, Jensen, Lisa Su.
Yeah.
We're talking about the rarest of rarest type of visions. And I think a lot of investors right now, they'll just sit there looking at valuation. When I look at AI, I view it, it's a 1995 internet moment.
Yeah.
I don't view this in 99 bubble, pets.com type stuff. Because look, at the end of the day, we're seeing it. I mean, we think next year it could be 8 to 10% of budgets from 1%. So when you start to look second, third derivative, it's from the software, from the MongoDBs to the Snowflakes to Salesforce.com to ultimately then what I even view as other chip players are going to benefit from the AMD and others. And then you have the pure plays like Palantir, C3 and others. And look, I just think it's a golden age. And with the Fed.
I was using the example recently that, sort of every 15 years, Silicon Valley has this tech stack, transfer, right? And it starts at the chip level, but then obviously in the software, now we have, and it always was like a $15 trillion wealth transfer. I mean, the numbers in this tech stack, transfer. And again, the person who sits there with a spreadsheet is saying, well, historically, this is my other one that I just can't stand. Historically, the traditional PE for S&P 500 stock was, 9. And then I will say, yeah, but in those traditional companies, they had 4% profit margins and they grew like 3% a year. And their business model was completely different. Once you got the software done, you just push a button, you recreate it. You have no cost of goods sold. Wouldn't the PE ratios have to be much higher if your cost of goods sold is 0?
Look, I think, but to your point, it goes back to like the growth over the next 3, 4, 5 years is something that it's not in these models.
Yes.
So my whole thing, because like there's so many people like Wilson and more, like people like that guy, like he does phenomenal work. So let's even like delve into the thesis, like, okay.
You're talking about Mike Wilson from Morgan Stanley.
Yeah, so and Mike, in terms of like numbers for this year, because it's not just Mike. I think a lot of people, they look at numbers for next year and then be like, stocks are expensive. And that's at the face value, that's right, that's true. Where I disagree is with a transformational theme like this, in my opinion, you got to look out 2, 3 years, what the incremental growth is. Is that being factored into these models? How's that being factored into your DCF? Because when I look at Microsoft, we're now, if you look at the initial pricing, even if you assume take rates are not 50%, assume they're 30%, you're talking about cloud revenue that's going to double over the next 5-6 years.
And you're just talking about, you're talking about Copilot, adding the $30 a month Copilot?
Just that.
Yeah.
That's amazing. That's amazing. Listen, let's leave it on that note though, on this block, because I do want to talk a little bit more about that vision, Dan. I mean, you lifted your price target on Tesla. Yeah. I'm sure the audience wants to know what kind of time frame you have in mind with that. But we'll get to that after the break. Please stick with us. We have Dan Ives from Wedbush Securities joining us today on Buy, Hold, Sell. We'll be right back after the break.
Ready for business in brief?
Bloomberg Briefs puts the power of Bloomberg to work for you with over 15 industry-specific newsletters available only by subscription. Each offers proprietary data, researched and written by acknowledged experts. Top analysts, dedicated economists, senior business editors, all presented in a concise, uncluttered environment.
It gives me the edge I need.
Go to BloombergBriefs.com right now for your free 30-day trial.
In a world where secrets have consequences and lies can't be hidden forever, immerse yourself in the gripping new thriller No Lie Lives Forever by Todd M. Schoenberger. Join Wall Street hedge fund manager Travis Carmichael as he delves deeper into a web of corruption and conspiracy, finding himself entangled in a high-stakes game where souls are at stake, and trust is a luxury he can't afford. Critics and readers can't get enough of this heart-pounding page-turner, calling it a masterfully crafted suspense novel that will leave you breathless. No Lie Lives Forever is a masterfully crafted thriller that will leave you guessing until the very end. With its intricate plot twists and unforgettable characters, this is a must-read for fans of suspense and mystery. From the mind of acclaimed author Todd M. Schoenberger comes a novel that will challenge your perceptions and keep you turning the pages late into the night. critics and readers alike can't get enough of No Lie Lives Forever. It's been hailed as a gripping roller coaster ride, a true page-turner that will leave you breathless. Don't miss your chance to uncover the truth. Immerse yourself in the suspenseful world of No Lie Lives Forever by Todd M. Schoenberger. Available now on Amazon and at finer bookstores near you.
Welcome back to Buy, Hold, Sell. We saw the Dow rally again for the 9th straight day, but we did see the tech-heavy NASDAQ drop 2%, and we're just at the start of earnings season. So is there more pain, or are we going to see some gains down the line? We have the expert among experts. Dan Ives from Wedbush Securities is joining the show today. And Dan, you have been on the news all day because following the Tesla earnings, Tesla had to sell off after the earnings report, after the bell yesterday. We saw more pressure today on the stock. Yet you came out and actually raised your price target from 300 to 350. That's a 35% increase from its current valuation right now. What kind of time frame are you thinking for this?
It's within the next year.
Wow.
And look, I think it could be conservative as it all plays out. Because look, my view is just they're now starting to monetize from superchargers to batteries to FSD to AI. And I think what Musk talked about in terms of talking to OEMs on the FSD side, and I think this is really the start of what I view as sort of the next phase of the Tesla story. Cybertruck later this year, potentially a Model 3 refresh. But it just goes back to look, very investors today, bears, I see it on Twitter, they feel like they won today. Remember, they won the battle. They'll continue to lose the war against the bulls.
I think on a split adjusted basis, Dan, if I remember correctly, I know because I was fortunate enough to make a recommendation on the IPO, and I think it was like at $15. You've been right about 48,000% from the $15 if you take the the 5-for-1 reverse split and blah blah blah. What I am interested in now, Dan, is where I love the idea of licensing. The idea that it was only going to be Tesla to have this IP, to me, diminished the whole, the part of my thesis on this was that as they get to its critical mass, you're going to have the other cars on this system. Otherwise, you're going to have, crazy drivers running into the perfect driver going down the lane. Yeah. Number one. Number two, you're leaving trillions of value on the market because they're so far ahead. But where do you see them with the value car, the inexpensive car, the first car? Where do you see them with that?
Well, first of all, essentially what's happening is you see with Supercharger, Ford, GM, Rivian, everyone now. They're essentially the Don Corleone of electric vehicle industry. Every piece, they're going to get a piece across the board, whether it's charging, batteries, FSD. And that's important because this is all the drum roll to the sub 30K car. Because look, at 70, everyone does that price cut. At 75,000, you're never going to get to millions. When you get to 30, 35K, especially with credits, and you can get there profitably because of the scale and reducing battery costs. That's how you then start to get to 3, 4, 5 million units.
Yeah, I'll tell you that I don't think people quite appreciate. Well, I know they don't. That the idea that if you lease an EV, it doesn't. It doesn't qualify for the tax credit. But if you lease it, the company that leases it gets the tax credit, and they credit to you. So I was just looking at, even though I think Fisker's going out of business, I do think that they did some good things in design, et cetera, and maybe
very good things design.
Where do you think the sodium battery? What is going to be the battery that's going to take the cost down so we can really have this sub 30,000? Because by the way, as you know, the average price of a vehicle in the United States now is like $48,000. So that's the average. But what do you think on the battery side? What do you think where they can go next in the battery?
Well, I think this 4680, I think that's the golden goose. I spent some time, over at Tesla in Nevada a few months ago, and I think the battery scale and the innovation that we're seeing, it's jaw-dropping. And if you look now what we're seeing in China, what we're going to start to see in Austin. I think that's why, right, they're just continuing to flex those muscles.
But what's jaw-dropping about their battery, Dan?
It's about the efficiency, the scale, the level that they're producing it. And ultimately, when you look at battery technology around the world, especially when you look at Tesla, I mean, the vast majority of battery technology, they basically have fingerprints on.
And have you looked at the sodium batteries?
Yep.
Yeah.
I've looked at sodium. I've looked at, I talked to like a number of battery players, whether it's here a lot, and in China, throughout Asia. There's a lot of technology. I mean, even like when you look like QuantumScape, like solid state.
Right.
Look, this is not like there's just one winner.
Yeah.
There's gonna be a lot of but actually, I'm a believer. Like when you look at the supply chain, like life cycle recycling play, like some of the charging plays, the raw material plays, the battery. I feel like that's the second, third derivative of really this green tidal wave that we're seeing play out.
Yeah, I follow lithium, right? So I'm actually an investor in a company that has lithium brine up in Calgary and up in Saskatchewan.
Yeah, in Canada.
Yeah, and it's like 50% cheaper. The DLE actually gets more out. And my assumption is, being an investor in this company, is that the vehicle
and GM, but that's what GM is. That's all about this. The line is like 24 to 25. If you look at Rivian with RJ, the team, I think the big thing there first is capitalizing on that. The supplier, the complexity. Now they've started to get their act together. I think that's turned the corner.
Yeah. So Dan, I have a question for you.
Yeah.
So Dan, you worked at Freeman Billings Ramsey in Arlington, Virginia. You're at the base of the Dulles Tech corridor that led out to AOL. Clearly, you saw all the tech companies bouncing around, the VC money being passed around, everything else. So we have a few minutes left in the show. Give the audience some idea of what we can expect for tech earnings this quarter, because you do have the long view. I get where that comes from, working at FBR. That makes sense to me. But traders, as you know, they have a short-term memory, so they're thinking very short-term. Yeah, Microsoft coming out next week, Apple the week after that. Are we going to see anything that might beat the street?
I view it as bullish going into this tech earnings. I think enterprise demand has shown an uptick. I think you saw a little of that from Arvind and IBM. I think you're going to see more of it from Microsoft. Could you have the knee-jerk reactions after? Okay, but realistic, I think numbers. I think Band-Aid's been ripped off. I think a lot of these sort of numbers are set for beats across the board. And ultimately, it's my view that there's an uptick in terms of what we're seeing with IT spend, which is bullish for enterprise software, bullish for cybersecurity. I think chips from an inventory perspective are starting to really now clear. And I think the Netflix and Tesla reactions, I don't view as the barometer for what's going to happen in tech. That's my view relative to the monetization that we're seeing.
Yeah, I'll tell you, I follow that system that counts how many times somebody says AI or other type of words.
Sure.
Yeah, and that looks like a Viagra triangle now, right? Because the mentions of AI in the last quarter were off the chart. When we get into this quarter, and people, the first question I'm going to ask some of these CEOs is, how far are you into your AI proliferation? Because if you're not, I think your stock's going to go down.
But the difference is, last quarter it's buzzwords.
Yeah.
AI. This quarter, it's the see, that's the difference. In other words, like, if there's a narrative that we're going to see, it's real spend.
Yeah.
Use cases. Look to see what we're seeing from Microsoft, from Google, from Amazon, the hyperscale. Because remember, the NVIDIA, the guidance heard around the world in terms of the $4 billion guidance raise. Now the next step, hyperscalers, Amazon, Google, Microsoft. But look, drop some breadcrumbs. If you look at that IBM report, everyone, obviously, that's a name that. But I think Arvind, in my opinion, Arvind gets it.
Yeah.
And you're starting even now to see IBM. I think Oracle's another one that's really starting to benefit. It's about the install bases.
Yeah. Well, I was going to ask you about IBM, Watson X. So I'm also an investor in a AI company that has patented a operating system. He's patented a new language, not HTML, but HSML. That because the big issue that we all have now is we have these silos of data, and unless they're structured, you can't ask, hey, Copilot, tell me, how much money Dan Ives spent on his last trip to China, because you can't get there. And there's a number of startups that are in the structuring this unstructured data so that you can actually apply AI. And 6 months ago, people would look at me like my eyeballs were backwards when I'd say, well, you got to have structured data to actually have artificial intelligence to get us beyond just generative stuff.
It's all about the data.
Yeah, it's all about the data, and it has to be structured. And oh, by the way, just ask, well, what were the earnings for Microsoft ChatGPT? And it's going to say, of course, well, I stopped gathering information on September 10th, 2021. So this idea that I think we have private AI, enterprise AI, we have public AI, but they're two completely different animals. And plugging ChatGPT onto unstructured data doesn't do a damn thing. Now you put it on structured data where it knows what it is.
Yep.
Also, let's not forget the EU, where, dude, if you're found with copyrighted data on your large language model, in theory, not in theory, in the new AI Act, they're saying that's $2 million to $10 million fine per violation.
But also remember, EU fines for tech companies, it's like drinking a cup of Dunkin' on 48th Street.
Well,
that's great. I love that.
Facebook got fined $8.2 billion. And they were like, okay, where do we send the check?
When Facebook gets a fine, it's like when they're at Pete's saying what type of syrup they want in the cappuccino.
Well, not everybody's Facebook. It's okay. I mean, some of us small people maybe don't want to, get the Kulu on the $8 million fine, but I'm totally with you. So, I guess my final question, Dan, is you think the inflection point is here? Obviously, you think the use cases need to get built out, but the desire, the need, the fear of missing out. I feel like we're in the FOMO moment for AI on the enterprise side.
But it's unlike anything that I've seen going back to internet. And I just wanted to, I would end with, this isn't hype.
Yeah,
I'm talking to people that are 10 times smarter than me, CIOs, data scientists. That's the one thing I stress. And I think that's all now. When these GPUs are getting bought, they're going somewhere. Go to the second, third, fourth derivatives. And I think that's really what's playing out here.
Well, our biggest success this year is SMCI. SMCI, when you buy, when you say, okay, in my hyperscaler, I need another rack.
Yeah.
You buy from SMCI, they're the second biggest, client of NVIDIA.
Well, we're going to, you know what? Oh, go ahead, Dan.
But Todd, I would just say, there's many that thought Djokovic was just a tennis player, Messi just a football player, Tiger just a golfer. That Ohtani is just an okay baseball player. They'll say the same thing about AI and tech. I think they'll just be proven wrong.
That is the best analogy I have heard, Dan. I absolutely love it. By the way, my hands were sweating so much in that last set at Wimbledon. I've never been more excited.
Dude, I was drinking. I was having to drink Cabernet in the morning.
That 30-minute game in the third set, remarkable. But listen, we're going to close it out on that. We'll talk tennis another time, obviously. So, Dan Ives, thank you so much for joining us.
Thanks for having me.
Hotel.
Thank you, Dan.
Really hope to have you back again. So this was great. And on behalf of Tobin Smith, I am Todd Schoenberger. Thank you to the audience again for joining us on Buy Hold Sell. We'll catch you next time. Take care.
I want you to smash that like button.
Ready to up your game and learn more about the thrilling world of sports betting? Introducing Double Down with Breslow, the ultimate podcast about the business of sports gambling. Join me, James Breslow, and a long list of expert guests as we dive into the art and science of the sports betting industry. Evolving regulations, technology enhancements, and the meteoric rise in the number of players makes this sector the fastest growing and most intriguing in the world. Unlock the business secrets from many of the industry's most recognizable C-suite executives, including famous odds makers and influencers. Every episode of Double Down with Breslow is packed with insider tips, deeply skilled analysis, and in-depth discussions. Don't miss out on the ultimate resource for mastering the business of sports betting. Listen to Double Down with Breslow on the Evergreen Podcast Network or wherever you listen to podcasts. That's Double Down with Breslow, the business of sports betting podcast.